You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. It is time, once again, for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is on the futures, options, trading and trending and analysis and volatility and skew and all those fun developments and a whole bunch more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network. If you like what you're hearing, A, make sure you subscribe to the full network so you're not missing out on anything. And then B, leave a review on your platform of choice so others can continue to discover this fun program and indeed this fun network. And C, keep those questions coming. We do love to hear from you guys. Let's see who we're hearing from today on the old program. Joining me, holding down the FTSE Russell hot seat today, our old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there in FTSE Russell land. Mr. Smith, welcome back to the program, sir.
Hey, Mark. It's great to be back. Thanks for having me. I'm looking forward to a great show today.
Yeah, good to have you on for a full show again, even if it is without your friend, Mr. Gramza there, sir.
Yeah, Dan Gramza, as I think I said in the very few minutes I was on the show last week, he's one of my favorite people in this industry and one of my favorite people, period. Just a wonderful person. He's so passionate about this industry, about this business, and he shares his passion like globally. So he's a man wanted around the world to share his knowledge with. People want his knowledge. So he's a fantastic guy, and fantastic that we had him on the show last week. And I'm going to ask for him again. I love him, and I promise the next time he's on the show, I will be on the show front to back with him the entire episode. So I'm making that promise right here and right now.
I told him that I think that you two are working behind the scenes to scam a third appearance here for Dan here on the program. But luckily for him, he's a pretty good guest. We don't mind having him back for a third time in as many.
He's the charm.
Yes, he is. Third time is the charm. Speaking of the charm, Mr. Smith, you know what I'm going to ask you next, sir. The charm of the week in terms of what is moving, what is shaking. Where should we begin our journey this week, sir, on our movers and shakers report? To the upside or to the dark side?
We're going light side.
We are going up. Well, let's see what our upside, a.k.a. the light side, has in store for us this week. Let's start off with number 5, the bottom of the top 5 here to the upside. It's soybeans, up 4.25% this week. Interesting, a little bit of light perhaps over there on the soybeans front. Number 4, it's the NASDAQ 100 E-mini, up 4.6%. Equities having an interesting week, indeed an interesting day. We'll get to all that in a little bit. Number 3, soybean oil. A little bit of a trend here to the upside, up nearly 5%, 4.95%. Numero dos here, easy for me to say, corn, up nearly 6%, 5.83%. So some ags feeling the love out here this week. And number 1 with the bullet out here this week, nat gas, up nearly 8%, 7.91%. It was also number 1 to the light side last week, up nearly 10%, about 9.5% last week. So a good couple of weeks for nat gas. Obviously, we have to put those percentage moves in stark relief terms here. Obviously, nat gas is a much cheaper product than a lot of these out there. So it's a little easier for it to gap up 8 or 9%. But still, interesting run out here for nat gas. Now we go to the dark side, listeners. Number 5 to the dark side is heating oil, off 3.49%. Number 4, feeder cattle, off nearly 4%, 3.98%. It was also number 4 to the dark side last week. So there you go. Keeping on pace for this week as well. Number 3, live cattle. Bit of a trend to the dark side here as well. Off 4.01%. So live cattle, feeder cattle moving in lockstep. They're not exactly surprising. Numero dos, the product category a lot of you have been asking for in our movers and shakers. Yes, it is Bitcoin. Off 5.25% this week. We detailed a lot of dark side, a lot of downside there on our crypto rundown program this week. Hopefully you guys tuned in on Monday. If not, you can get it after the fact, wherever you get our fine network out there breaking down the volume, the volatility, the skew, a lot of stuff we do here for crypto, mostly Bitcoin, a little bit of ETH and some others thrown in there as well. So check out that show if you want a whole mega dose of all things Bitcoin. Number 1 to the dark side this week, Eurodollar is off 6 2/3%. It was number 2 to the upside, to the light side last week. So it was up 9% last week. And our number 1 to the dark side, I should say, last week, platinum, is now only number 16, off 0.073%. So quiet week for platinum. But, you know, Mr. Sean, I think we got to start in your neck of the woods this week, not just because you're here with me, but because there's a whole freaking heck of a lot moving and shaking in the equity space as we speak. It's one of those crazy days where if you don't like what's happening in the market, just wait 2 minutes. We're just coming off the heels of our other program, the Option Block, and going into that show, it seemed like there was a certain narrative in place, which was the markets are mostly rallying, yet another green end to a mostly green week. And then we had this kind of worm turning moment right as the show started where most of the major indices, the S&P and the NASDAQ, I do believe the Russell 2000 as well, all dipped into the red. The only outlier, the only straggler to the green was the Dow, up about 0.25% or so. Everything else was pretty firmly in the red. NASDAQ was off nearly a full percentage point, over 0.75% to the dark side. And now, as we come into TWIFO, Sean, the worm has turned again. The Dow is up nearly a full percent, so keeping that upside love again. The S&P back to the upside firmly, up 0.5%. And we've got the NASDAQ now actually green as well, up almost 0.1%. So it swung nearly a full percentage point just in the past hour and change out here. So a lot of action out here in the equity space. That means all things vol have been moving as well. Again, this is another one where wait 5 minutes and these numbers are going to change. But right now, coming into showtime, we saw our old friend the RVX, which is, of course, the VIX of the Russell 2000, at about 30.25. That puts it up, about 1.5 handles from last show. VIX itself, VIX cash, was at about 25.25. That puts it up about 2.25 points from last show. And that means that spread is at exactly 5 points, which it has tightened up. It was 6.4 points coming into the show earlier today, so that spread has tightened up even intraday. That's actually down, looks like about 3/4 of a point from last show. So interesting stuff out here in the vol space. Sean, a lot of this seems to be driven by this big announcement coming out of the Fed today. We talked about this on the option block, but I do want to get your thoughts on this as well, because this seems to me to be a very major seismic shift when it comes to what the heck the Fed actually does. There's a lot of banter and bickering on different sides of the political aisle about whether we should have a Fed, what it should really do, all these other things that are high-level political debates out here. But one of the things the Fed has always really stood for was kind of being a bit of an inflation hawk and kind of clamping down on the irrational exuberance periods of, let's say, the go-go 90s and everything like that. Now today, Powell coming out, Jackson Hole, and saying, we're not really going to do that anymore. We're going to kind of let the bit out of the horse's teeth and let it run a little bit. So if the market's doing well, we're going to kind of divorce ourselves from focusing solely on inflation. Inflation has underperformed that target 2% rate for a while. So we're going to focus more on unemployment and these other metrics that we can maybe act on as well, which is very interesting and a markedly different shift. I can't imagine Greenspan or Volcker or some of the other regimes out there in the Fed making an announcement like this. So a lot to unpack today in the equity space, Sean. So let's start there. Do you have any thoughts on this sweeping policy change from the Fed? And then also, what else is lighting up your tape in this very volatile day for the equities, sir? You're so excited you have muted yourself, sir. You're speechless.
I have.
With the Fed.
Geez, I was on mute. Sorry about that. One of these days, it's just, that's a new app, just auto unmute when someone starts speaking. But then someone might be saying something they don't want to be heard. So
that is true.
Auto unmute isn't a good app.
That could be a dangerous app in this era of Zoom calls.
I think I'm not an economist, and I think I've said that several times on your show. But inflation has been non-existent for quite some time. But I honestly believe that the Fed is going to focus on where the economy needs focus. But no matter what Federal policy said today, they're never going to take their eye off the inflation ball. That's always going to be there. They're always going to keep a diligent watch. But they are going to focus on things that are dramatically affecting the economy. And with that comes volatility in the equity space that you brought up next. And that is, and I have to bring up a blog that just came out. It's got to be an hour ago on our FTSE Russell website from our head of strategy, head of equity market research, Philip Lawler. And it talks about U.S. and the title is U.S. Stocks Summertime Sizzle, and it's a piece on our large cap Russell 1000 versus 2000 small caps, and how the Russell 1000 has risen 11.5% in the third quarter, and another 5.4% in August, as of I want to say as of just a day ago. And it's up 8.4% for the year, while the Russell 2000, my champion small cap index, is still down 5% for the year, but has gained 9.2% and 6.2% for the second quarter in August, respectively. So this is all in this blog, but I just wanted to bring it up because it's something to look at. I've actually sent it over to you so you can tweet it out to the audience. But I want everyone to take a look at the Russell 1000, the Russell 1000 index, and the Russell 1000 future at CME Group, symbol RS1. And I put this out to everybody to comment back to me next week on their thoughts on this product, their thoughts on this index, and let's see if we can get some feedback in regards to the Russell 1000. And again, Russell 1000 is our large cap versus the Russell 2000, and this is that large cap, small cap analysis that you and I talk about every week. We use VIX and RVX to have the conversation, but there's this Russell 2000 small cap index still being down. I don't know. I think I say this almost every single show. The Russell 2000 outperforms to the downside, but when there is incentives, most particularly by the Fed, to strengthen our U.S. economy, the Russell 2000 outperforms to the upside. And with it being the laggard right now, I think everybody should be watching this Russell 2000 in a big way right now. It's going to be an interesting trade, and we're getting into election season. Volatility is here. Volatility is not leaving us. So the spreads between large cap and small caps are something we continue to need to watch. The economy is going to continue to sizzle. The economy is going to continue to have its ups and its downs. I don't think inflation is going to be that indicator as the chairman mentioned today, but no one's taken their eye off it, and everybody's going to be continuing to watch it as one of those economic indicators. So I'm looking forward to a fantastic trading election season coming up, and a fantastic trading post-election season coming up as well. So we've got lots of trading coming in the coming weeks and months.
Interesting. You mentioned the potential for small caps to outperform. We saw a similar analysis coming out of, I think this was investing.com, had a whole write-up called Big Move on the Way for the Small Cap Russell 2000. They point out a whole bunch of different metrics, some of which you mentioned in your article there as well. We'll send out the links to both of these so listeners can see for themselves, their listeners. But they mentioned comparing all the major indices on a year-to-date and a performance since the March lows basis. And on that index and the disparity between the two, the largest chasm is clearly in the Russell 2000. It's off 11.3% year-to-date and up 57.8% since March 20th. So crazy times here in the Russell 2000. That's far and away the biggest gulf in any of the major indices. So interesting stuff out there. And they point out a lot of different metrics as to why they think that this is. Gets into a lot of technical jargon, which you know me, listeners, I'm not the biggest fan of hanging men and all these other shining stars, all these other interestingly, euphemistically named technical charts. But if you want to find that for yourselves and why they think small caps are positioned for a big breakout, it's kind of interesting. They think Russell 2000, in the synopsis of the article, will close the year-to-date gap with the other major indices and potentially break out with the same bullish pattern that the Dow recently completed. Well, let's break it down really quickly, see what's lighting it up over there on CME land. You guys, as always, can play along, cmegroup.com/TWIFO, TWIFO, or /TWIO, This Week in Futures Options, or This Week in Options, an old name of the show. Both of them seem to work over there. They should. If one doesn't work, try the other for you. You can get these reports for yourself. Let's pull it up here. In the equities, let's go out to Russell 2000, see what's lighting it up out here. Russell 2000 on the week, up about 1.25%, so a decent week. Also, the vol up, which is kind of interesting. Not usually what you see in the equity landscape, but these are, as we said many times, unprecedented periods for the broad market. We're moving into the election here in the U.S. That's adding a little bit of juice to the forward vol for a lot of these equity products out here right now. There's certainly a heck of a lot of uncertainty. If you look at the volatility surface, it's pricing vol not just through the November election, but into December, even into January. So there's some folks out there who are betting we may not know who the heck our president is all the way through Inauguration Day. I hope for our country's sake we don't see that. I was down there on the trading floor during the whole Bush-Gore fiasco of 2000. No one wants a repeat of that. But still, the vol surface is pricing in a wee bit of juice. And small cap vol up this week, which is kind of interesting. Going out to where the action was this week, it was once again in the weeklies. That was the most action, about 32%, with this contract going out tomorrow, the week 4 contract, getting the lion's share of the action. But actually the biggest trade, looks like it was coming in some upside calls, which is unusual for the small caps. We're at 1567.5 out there in small caps, and the big print was the 1675 calls out there in September this week. That's unusual. Usually it's a lot of downside out of the money puts that are getting the love in small caps. But this week it's upside calls. Sean, anything on your radar here as we're looking at the upside calls printing in Russell 2000, as we're seeing a lot of analysis pointing maybe to a bit of a return of outperformance here in Russell 2000? Anything else catching your eye in equity land before we keep rolling, sir?
You know, I keep looking at the index performance to date, and we talked about the 1600 level being a barrier, and just earlier this summer, and it blew through that, or was it in the spring? I'm like, time has just like flown by here, Mark. But we, as it became a topic for you and I, we watched it fly through the 1600 level, and I'm just watching it. I'm just thinking, 1600. I think upside call buyers are remembering that and the potential of this outperformance possibility of the Russell 2000 in the near future. So I'm not surprised at the upside buying. It's interesting, but as we do know, as markets rally, vols come in. So I'm sure that anybody purchasing options is aware of that in their equation. So it's going to be an interesting trade to watch.
That it will be. It's going to be an interesting show to watch or indeed to listen to today here, Sean. So we have a lot of products that are lighting it up. Where should we hang our hat next, sir?
Well, we're still talking about I thought you were going to mention something about the NASDAQ. Not that it's a big topic, but, Salesforce.com got entered into the Dow, and, tech is heavily weighted in the Russell 1 and also in the Russell 2. So I think that's been a big mover for the technology stocks this week, with Salesforce getting into the Dow. That stock's up monstrously this week, right? So just interesting to stay on the equity discussion for just another minute or two. So, yeah.
That's an interesting point because you're right. We did forget to mention, we have the upcoming discussion on the launch of this NASDAQ vol product between CME and NASDAQ. If you want a little more insight into that and maybe how SIBO views it, check out the interview we just did with Ariane Cricky over there in SIBO land, talking about the vol space and a lot more, mini VIX futures, everything else like that. And also, speaking of new options products on the horizon, almost buried the lead here, we got the new mini, I should say the micro E-mini option, so the options on the Uber popular micro futures over there on CME. Those are coming up soon. Those are launching on August 31st here, Sean. So a lot to unpack. We're going to have Tim McCourt on the show, I do believe, next week to break all that down and a lot more. So a lot popping off in the equity and indeed the volatility options and future space. And that's a couple of weeks here, Sean.
One, I'm a huge fan of Ariane Cricky. She's fantastic over at SIBO. She's tremendous to work with. I enjoy every moment that we spend with her and the SIBO team. So nothing but complete respect and for her. She's the best. Tim McCourt, he and I are strong partners as well. So I'm going to be looking forward to being on the show with Tim next week and talking. Of course, your audience is going to knows that the two products that are coming out, and hopefully someone asks where's the Russell micro options. Let's have Tim answer that question next week.
I think we'll put that question to him.
Put him in the hot spot before he even shows up.
I think we'll put that question to him next week on the show. So look forward to that there, listeners, all of you out there who want more tradable products in the Russell 2000. We got your back. We're watching out there as we keep on rolling. Metals have been rolling quite a bit of late. Some interesting analysis coming out of CME, I believe, right before the show, hot off the presses here. They were analyzing the various volatility levels in the different precious metals and indeed even some of the base metals out there. They started with gold, of course, as you are wont to do. If you want to find this for yourselves, it's over on the education section of the CME website over there. They're looking at gold volatility. We talked for a while about how gold vol was kind of a bit of dead money for a while there. Interesting analysis here from CME. The implied vol in 2019, so all the way back in 2019. Who can remember back that far? But it was in the 10% range with high periods in the low teens. For 2019 overall, gold vol was approximately one standard deviation below the 10-year mean, which is approximately 15%. That shows you kind of how just weak gold vol was for the better part of that year. Of course, fast forward to 2020, nothing has gone according to plan so far in 2020, including gold volatility. Gold vol has been approximately 1.5 standard deviations above that long-term mean so far for the year. Vol started in the 10% range, kick off the year, spiked to about 40% in late March. That's because there was some concerns, disruption, what they thought would be the supply chain for actual physical gold bars, led to a little bit of fun there on the curve. Vol has come in a bit since then, from March through July, down to about 15%. Of course, we saw gold trending upward to over 2,000 for the first time. And when that happened recently, spiked back up again to about 25%. So interesting things afoot here, some great graphs to accompany this analysis. Silver, another one that's been on our radar a lot of late. Silver vol 2019, another one. Vol was pretty much one standard deviation below the 10-year mean, so another precious metals product where the vol was kind of anemic. Wasn't really worth selling. You could buy it, and I remember when Nick used to be on the show, he used to argue that it moved enough to make it worth your while. And there certainly was an argument, I think, to be made for that, but it was one of those spots where you couldn't really sell it, and was it cheap enough to buy? Maybe. Did you get the move for it? Maybe. Kind of depended on the product and how you hedged it. So it was an interesting debate to be had there. But that's kind of the level that precious metals vol was in for quite some time. Kind of that weird zone where you didn't really want to buy it, sure as hell didn't want to sell it, and it was kind of languishing there. But fast forward to 2020, silver vol 2 standard deviations above the 10-year mean. Implied vol kicked off this year in the 20% range and then spiked to nearly 70% in that same crazy period of late March as the metals markets got very turbulent there. It kind of dropped off again, of course, between March and July, down to about 25%. Then, of course, on this recent run-up on the precious metals, spiked back up to 65%, as you saw silver hovering or getting close to that $30 level. It's not all precious here, listeners. Also a little bit of analysis on the copper side. We talked about copper on the show last week with Dan Gramza as well. It's been an interesting one to watch of late. Copper vol has been fluctuating quite a bit, from the high teens to the low 20s over the last couple of years. That's up until the recent spike we saw out here caused by all this concern about a disruption in demand for all things copper. Copper used in a lot of different applications out there. A lot of those we're seeing maybe to be trimmed due to results of the COVID-19 pandemic. We saw vol gap up to about 40% as we saw copper actual pricing fall to about $2. Since late March, since that really turbulent period, copper vol has gone back down to its mean as the price, as we said, we've covered to about $3 out there. So interesting story from a vol perspective out here over the course of 2020. Let's go back out to gold. That's where a lot of you have been really fixated of late, as gold has made this march to 2,000, then broke through it, then kind of retreated back. Now we're on that latter portion again here this week. Gold at 1927 and about a half coming into this portion of the show. Puts it down a little over 0.5% on the week. So right about 10, almost 11 handles on the week. So not a huge action-packed week for all things gold out here. Let's see. The most active month, or I should say most active contract, was this October contract with about 42% of the paper out here. The big print out here this week, the most active contract was, not surprisingly, 2,000 calls, listeners. That's kind of where the lion's share of the action was. 4,350 contracts on the tape. The lion's share of that not coming at all. The system seems to want to hang out there today. So we're not going to see where that's coming right now, listeners. Instead, we're going to flip down to see how much paper is on the tape. And actually, we're at exactly the same amount as last week from an overall option perspective, which is kind of interesting. I think my stats are a little bit slow to update here this week, listeners. Let's go on out to the skew and see what's been afoot in this most active October contract. The puts last week were about 1% cheap to the at-the-money. That's kind of interesting. This week, they are 1.9% cheap, so puts getting a little bit cheaper. Calls, 3.9% rich. You expect to be a bid to the calls this week because calls have been where the action has been of late, and that call bid has increased. It's up to 6.3% rich to the at-the-money this week. So interesting stuff afoot here in gold. Let's jump really quickly to its sister metal out here, its little shiny sibling, silver. I know a lot of you have been slinging that one of late as well. All right, let's see if we can move on to silver. You know what, Sean? Nothing's playing ball with me here today. Any thoughts here on the metals, sir, as I get my analytics suite all reconfigured, sir?
As you get reconfigured there, I'm thinking, it'd be great to get Derek Salmon back on the show again and kind of walk through some of this with us. He's so knowledgeable about the metals business, but again, he also owns the options business across all asset classes at CME Group as products. So Derek Salmon would just be another great guest for us to put in the CME hot seat. What do you think of that?
Yeah, he has been on before. Derek is great. We'll have to look into getting him back on. A lot of other people have been edging him out of late, like Tim and others over there at CME. They all want to get on, Sean. It's a popular hot seat to be in these days, but we'll see if we can get Derek back on, because you're right. He has kind of the purview of all the options products out there. Speaking of the options products, there we go. Now my screen has finally decided to update for me, listeners, with what's going on right now in silver. You guys can find this, as always, cmegroup.com/TWIFO. Hopefully should update a lot faster for you than it feels like it's doing. Too much activity going on right now. It's bogging everything down out there, listeners. Let's see what's going on. Silver, 27 and about a third right now, up about a little north of 1.5%, about 1.6% out there right now. The most active contract, once again, October. And again, silver does about 19,000 contracts so far this week, so a little bit more active than, let's say, some of these smaller contracts, but not as It's not a euro dollar out there, anything like that. And the most active month with about 52% of the paper was October, listeners. That's where the lion's share of the paper was going up out there this week. And then October, let's see how the skew was out here this week. The puts were about 4.9, almost 5% cheap to the at-the-money last week. This week, 2.7% cheap. So puts getting a little bit firmer. Calls, 2.1% rich to the at-the-money last week. This week, 3.6% rich. So a little bit firmer out there. By the way, if you're wondering what that vol is, it's about 27.25 right now in that October contract out there. So the vol actually up a little bit this week as well. Let's see in this October contract. Let's say it was the 300 calls were the most active out there in the October contract, but the biggest print of the week with about 1,200 contracts was actually the 34 calls out here in December. They did about 1,200 contracts here this week. So that was the big dog, 34. That's an interesting strike out here, listeners. Not the one I probably would have guessed when I first pulled it up. Here we go. Now it's starting to play ball with me. The 34 calls went up throughout the week pretty much. About 500 on Monday, 300 on Tuesday, and 300 and change on Wednesday. 0 so far today, so about 1,200. And pretty much all of that opening. So opening upside in December. Let's look really quickly at the skew in December to see if we can decipher this. Calls were 6% rich to the at-the-money last week. 5.1% rich this week. So maybe a bit of overriding going up there to that far upside of the call wing in December. Interesting. We'll have to pay attention to that. But Sean, I don't know. Looks like we had a lot of ags on our movers and shakers this week as well. Haven't had a chance to do an ag breakdown of late here on the show. What do you think to a little bit of maybe, I don't know, soybeans or corn on the show, Sean?
That's if we could get into a little bit of both, that would be great. I'm looking at the rally of our ags. And looking at the weather is obviously a big component of that. And there's been some real volatile weather as of late. And I think a look at soybeans to start, and then possibly corn. Well, corn outperformed, right? 5.83% this week. So then let's talk soybeans. I think soybeans could be an interesting conversation. What do you say to that on the opposite side?
I think let's do some ags. Let's do some soybeans. I happen to have corn up first because it outperformed, and given the way my system is slowly lagging today, I think we're going to keep it there for now. We'll get to soybeans in a second. But, of course, corn. I know we have a lot of corn heads out there. I'm not sure if that's the technical term, but I'm going to coin it out here nonetheless. A lot of corn aficionados out there in the audience who are always angling for a little bit more corn on the show. So let's see if we can make them happy today. Coming into showtime, 358.25 is where that front future is. That puts it up about 5.25% on the week. Remember, our This Week in reports are from Monday on, so just not from our last show. Our scans are from last show. This Week in is from this beginning of this week until right now. Let's see. The most active contract out here was the D's contract, 44.1% of the paper. By the way, if you wonder how much paper corn puts up, it's pretty active, about 318,000 contracts on the tape this week. So it's a pretty active beast out there. Let's see what the big print out here. We're at the 358.25 level, listeners, and it was the 320 puts in December that were dominating the tape this week with nearly 20,000 contracts going up. 19,000 and change of these 320 puts on the tape so far this week, which is kind of interesting. By the way, let's look at the vol before we break down some of the further action here in this D's contract. The vol out there, 1862, up almost 1.5 points. So getting a little bit juicy from a vol perspective. Skew-wise, not a huge change this week, which is kind of interesting. The puts were 2.9% cheap last week, 2.8% cheap this week, so effectively unched. The calls were 5.2% rich last week, 4.8% rich this week. So not a lot of change from a skew perspective, which is kind of interesting, even though these 320 puts were dominating the tape out here, trading pretty much all week. 1,200 on Monday, almost 11,000 on Tuesday, and almost 7,000 yesterday. Again, not a lot on the tape so far for today. And again, most of that closing. So interesting stuff afoot out here today. Followed hot on its heels by the 330 puts, doing about 14,000. Also active throughout the week. The big day was Tuesday with nearly 7,000 of those bad boys up on Tuesday. Then we got third place here, the 360 calls. We got to go all the way down to number 3 to find the first call on the list. 13, almost 14,000 of these going up. The lion's share Tuesday, 9,500 out there today. I'm getting blanks on most of the volume for today across a lot of these products, so I'm guessing that's probably what's hicking up the statistics out here a little bit. It's probably gumming up the works. A lot of things trading over there right now at CME. Seems to be slowing things down a little bit. Hopefully that'll rectify itself by the time you're listening to the show. Listeners, you can check the reports for yourself, see what action is going up out here today. But Sean, you requested soybeans. If I could fight my way through to make that happen for you and for our listeners, we shall begin that. Soybeans were number 5 to the upside this week, listeners, up about 4.25%. Soybean oil also lighting it up out here, up almost 5%, 4.95% out there. So let's see what we've got on our hands today so far this week. There we go. Here come the soybeans, Sean. Better late than never. Total of, let's see, about 160,000 contracts on the tape for soybeans. So a wee bit lighter than the corn out here. We're at a 946.75, so about 50 handles shy of that 1,000 level out here in soybeans, listeners. Let's see what was lighting it up out here this week. The most active contract. Actually, I take that back. Now that the stats have updated here to take the full. Remember, I like to hit select all. Sometimes that's a lot of information. Maybe you guys want to avoid that. I like to hit select all. And when you get all those months baked in there, about 329,000. I thought that sounded a little bit light for all things soybeans. So a lot closer there to our old friend there, corn. And let's see. Number 1 with the bullet this week is out there in November. 41% of the paper. And I mentioned we're hovering close to that 1,000 strike. Well, it was the 1,000 calls in November. That led the dance out here this week with 17,244 contracts on the tape. Let's see what was lighting it up from a vol perspective as well. Out to November, the vol 17.18, up 5 points. So a huge jump in vol this week. Let's see if there's a similar move on the skew. And yes, there was. The puts were 13% cheap to the at-the-money last week. This week, about 4% cheap. So puts getting firmer. Calls 9.1% rich last week. This week, 8%. Calls coming in a little bit, but the puts getting quite a bit juicier out there, which is kind of interesting. Let's see if there's any other funky strikes on the list here. There we go. It looks like they've got it sorted out over there. I'm getting paper for today here as well, which is nice. So a little bit of an update seems to have gone through to speed up the analytics out here. We got the 1,000 call, 17,000, I should say, 244 on the tape. The big day is today. So we're getting today's paper again. 8,200 on the tape today, 4,600 on Tuesday, 3,200 on Monday, and about 1,000 on Wednesday. Kind of slightly biased towards opening, but again, we don't have today's OI change, so we don't know for sure out there. Then it drops off a bit to number 2, the 900 puts, also out there in November, doing 13,000 and change. The big day also today, 8,700 going up out there. So a big day for a lot of ags out there today. Let's look really quickly, see any other crazy prints. 880 puts also active, 12,200. Take a guess when the lion's share was today, 6,000 and change out there. So take some of what we mentioned with corn with a little bit of grain of salt there earlier, listeners, because we weren't getting all the numbers put through for today. That might change some of that analysis a little bit. But speaking of the analysis, we have to keep on rolling here, Sean. We're coming up against it. You want to squeeze in one more product, or do you want to dive full on into the bevy of listener questions waiting for us, sir?
Let's go, listeners. I always enjoy answering listeners' questions.
I'm with you as well, particularly as we're fighting through the sea of activity on CME Stats today. We'll see if we can get these updating faster for you. Next episode, listeners, as we keep on rolling into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, the mailbag's been overflowing of late. See how many of you guys we could squeeze in here on the program. Sean, here's an easy one for you here first. This comes from Allentown, Maybe he lives in Pennsylvania. We shall see. Quick question. Do you guys have the recordings of the FTSE COVID impact webinars on your network? I can't seem to find them. Thanks. Well, no, we don't have them on our network there, Mr. Allentown. They were not productions of the Options Insider Radio Network. They were done over there at FTSE Russell. So, Sean, I'm sure you have some insight for our listener here as to where he could find the recordings of those recent webinars you did, sir.
We do, and Allentown is a fabulous place if you're from Allentown or if you're in Allentown. I went to school in Philadelphia for college, and I was actually born in Philadelphia, so I'm a big Pennsylvania fan. So, Mr. Allen, Mr. or Mrs. Mr. or Miss Allentown, if you just go to FTSERussell.com/webinars, there's a whole slew of our webinars. You'll find what you're looking for in terms of the Russell 2000, the Russell 1000, and our economic webinars that we have done. There's a whole library there. So enjoy. And if you have any questions, you know how to reach me, smith@FTSERussell.com, and I'm happy to lead you there. And if you email me, I'll send you the links to make it even easier for you. So happy to help you.
There you go. That's a good question. Maybe in the future we should pull some of those recordings and put them out maybe on our special events feed so our listeners can get access to them too here when they're listening to this show and they want to check out some of those webinars. But FTSERussell.com/webinars is the mothership for all that stuff, Mr. or Mrs. Allentown. Next up, we got JLT33. He says, hey guys, great show. I especially appreciated the discussion about future symbols last week. Yeah, Dan and I got into that. It was kind of fun. He says, they've never made sense to me. I'm glad that I'm not alone, and even Dan Gramza can't make sense of them. Keep up the great programming. I'm not subscribed to the full network. I am subscribed to the full network. It's been a lifesaver during the pandemic here. He's referring to, Sean, we had a question last week from Big Tim. He wanted to know, why don't future symbols make sense? Why don't they start with A instead of F? Why is November X instead of Y? The only thing that makes sense is Z for December. This kicked off an interesting conversation between Dan and I last week, Sean, where we kind of got into a little bit about what was going on, what was wrong with future symbology. And Dan very much agreed with our listener that he thought they didn't make any sense to him either. And he's been educating in the future space for 30-odd years. So what do you have to say here for JLT33? And maybe even from our question from last week, Sean, do you agree with Big Tim that they don't make much sense, the future symbols?
First of all, I've worked on 1, 2, 3, 4. I've been on trading on 4 different derivatives exchanges in my history, and they all had hand signals. So you had to know various equity options exchanges, you had to know the alphabet because everything was by the stock symbol, like except for stocks like Anheuser-Busch, which was Bud. All you had to do is put up your 2 hands and act like you were opening a can of beer, and everybody knew you were talking about Anheuser-Busch. But really interesting. There's probably a technology reason for them to hit the ticker, for them to be the letters that they are, but it could be something as simple as the hand signal. An X is probably harder to see from the floor to a booth up on a balcony. September is U, so if you just make a big U shape with all of your 5 fingers, easy to see. And again, I don't know if Dan Gramza went into any of this kind of stuff, but it was a physical open outcry world before it was all on screen or mostly on screen. So I think there might be some method to the madness of the hand signals in this, along with some technology in regards to the tickers and being able to use certain letters with certain numbers. My guess. I don't know if Dan went into that, but
we didn't get into the open outcry origins. Of course, all this was born back in the pits. I remember, of course, arbing all these signals back across for Dees
right.
And all the other months as well. So maybe there was something to. Of course, you didn't really arb a Z for Dees, though. You arb kind of like a symbol for it, So that reason makes about as much sense as any of them, Sean. Which is, I'm not sure if there's any that really makes a lot of sense. Dan and I were kind of hard pressed to come up with a reason for why they have this system. I mean, if you want to go with Z at the end of the year, then maybe you work back from that. Maybe you start with A at the beginning of the year and work forward from that. The skipping of numbers with months, or skipping of letters, I should say, with months I think it's needlessly confusing, but that's unfortunately where we find ourselves. A lot of brokers have done a good job, though, as we mentioned on the show last week, of kind of obfuscating that. You don't really need to know the symbol to go out there and say you want to sell a covered call against WTI in November. You don't need to know the symbol to do that. Most brokers have gotten rid of that layer of abstraction for you. Here's the call, here's the strike, here's the premium it's trading for. You want to sell it, go for it, hit the bid. You don't need to know what exactly the symbol is. So thankfully, a lot of that has gone the way of the dodo, but there still are places where you do need to know that, and unfortunately, it does linger. But it is an interesting question. It seems like it clearly has resonated with a lot of our audience out there. Why do you think we have this ridiculous symbology for futures, listeners? Hit us up, let us know. But clearly, you guys have thoughts on this issue. Let's see what else we got here. Let's go to Robbie. Robbie says, why is TWIFO half an hour after OB, which is the option block? Why not right after it? I love both shows. Just wondering about the schedule. That's a little bit of a throwback there, Robbie, that, we used to do TWIFO, and OB live in the studio, of course. And so we'd have guests like Sean or others coming in for TWIFO. It required a little bit of rejiggering after the option block. We couldn't just dive right in to the next program. We had to get the guests in, get them set up, all the other stuff like that. So it was a little bit more work. Sometimes Sean and I would have delicious premium gourmet hamburgers. I'm just throwing that out there. Those days are gone. I miss those. So there's a lot of things that went on behind the scenes to rejigger for in-person guests between the shows. You also had to kind of tweak the discussion points. As you saw today, things evolve over the periods of shows. So the talking points we may have had planned for a show going into, let's say, option block, by the time we get out of that show and go into TWIFO, could have completely changed. The narrative could have shifted. The Fed could have said something crazy. Something could have happened in the presidential race. Anything could have happened. So a little bit of cushion time is also good to make sure the next show is addressing the right topics out there. So we've kind of left that in as a legacy from our in-person recording time. And it just helps us to reschedule and get things going out there. But if you're listening live, we always pump in fun stuff into the live stream. So you're never without content. You get good stuff in between there as well. If you're listening after the fact, this is all moot to you. You don't even know. You just hit next on your player of choice, and you go on to the next program. Like we're going on to the next question here. This one comes from AJ. AJ wants to know, can you talk more, he spells it interestingly, more about cross-asset correlation and the tool you mentioned on your show? Any interesting relationships forming over this crazy year? Well, yeah, he's referring to this cross-asset correlation tool. We highlighted it back on the show a few months ago. It's a pretty cool tool. You can pull it up and pretty much look at any asset class versus any other asset class or just about any time frame that you want. So just for you, AJ, because we like you guys so much, we pulled up that tool and we ran it for pretty much the beginning of the year right through till about now to see what's going on out here from a correlation perspective. And some of these are pretty standard about what you'd expect. Others, maybe not so much. Let's highlight a few of what we found out here. The largest correlation throughout the entirety of 2020 so far is the S&P to the NASDAQ. Probably not a surprise there. About 95% correlation. Beyond that, out there in the rates complex, also strong correlation on the farther portion of the Treasury curve, the 10-year to the 30-year, number 2 there at 94%. Also, not really a big surprise. Then we drop off a little bit. The next closest correlation is actually the front portion of that curve, the 2-year to the 10-year at 83%. Then we drop off a little bit again to another off-track relationship out there. That's silver to gold. That's at about 79% correlation out there right now. Then we actually have the exact same amount of correlation between WTI and heating oil. So intra-complex correlations, that's kind of what you'd expect in a lot of those. Heating oil to RBOB, also pretty close at about 69%. But we keep dropping off a little bit. Then we go out to FX. That's our next stopping point here for the Euro USD to the Pound USD. Those two spreads move at about a 54% correlation, so roughly 50-50 out there. And then we get to the negative side. Interestingly, a lot of you have been asking about Bitcoin of late. Bitcoin is, so far for this year, correlated negative 27% to the S&P. So that kind of makes the argument for not quite the uncorrelated, but closer to that than perhaps some people had thought. Obviously, in those big panic moments like back in March, it certainly was positively correlated to the downside. It sold off 30% when everything else was selling off. So in those moments, maybe not the most reliable thing for this non-correlated asset, but pretty light negative correlation, about negative 27%. It's not certainly zero. It's not 0.01% like some people might hope it would be if it was truly uncorrelated. But I'd say a light negative correlation so far for the year between Bitcoin and the S&P. Also, as you would expect, the 10-year to the NASDAQ. Perhaps that's a little bit lighter inverse correlation you might expect as well. It's only minus 43%. You might expect that to be a little bit higher. Like, let's say, perhaps the 30-year to the S&P. That's at about minus 46%. So that's our strongest negative correlation here on the board. There weren't a lot of surprises that leapt out to me. Maybe the Bitcoin one, a little bit surprising out here. But, S&P should be moving with NASDAQ, the 10-year to the 30-year and the 2-year to the 10-year. Not that surprising. Maybe the pound to the euro one being as light as it is kind of a little bit surprising out there. But then again, I don't spend all my days in and around FX. Maybe that historical level of correlation is pretty accurate. I'll have to drive that machine back a little bit and see how that stacks up to previous years. Sean, there's a lot of data to parse here. Any of these correlations or perhaps lack thereof, any of them really leaping out at you, sir?
Yeah, nothing really jumping out at me. The spread between the 30-year and the S&P, not surprising to see the rates and equities. Crude and heating oil, highly correlated. S&P and NASDAQ highly correlated. Equities are correlated, right? So, yeah, nothing really jumping out at me in particular. But very, very interesting tool to be able to put in cross asset correlations. But maybe heating oil versus the S&P would be an interesting to look at, or metals versus currencies, or equities versus currencies are all kind of interesting to look at from a correlation perspective. Maybe some of the unobvious ones would be ones to kind of look at. I think there'd be some pretty interesting pictures there. I mean, that's what comes to my mind thinking about this tool.
Yeah, they're all there on that chart. None of them really leapt off the page as, surprising correlations here. I'll get the up-to-the-minute one, if you guys can bear with my system here a little bit. We'll try to get the up-to-minute correlation for the year for WTI versus S&P. While we're doing that, Sean, there's an interesting question here, kind of up your alley from 565U. They want to know, do you feel that big funds and asset managers tend to overlook things like implied volatility in favor of analyzing the net cost of a trade? They care that an option costs $3, not that it's an 88 implied volatility. If they think it will be worth $10 at expiration, that's all they really care about. Interesting question, Sean. I'll let you rum over that in your mind, let you mull over that a little bit while I go search for your cross correlation for heating oil, sir, and for WTI.
Big funds and asset managers that trade options are always looking at implied volatility, because the implied volatility is going to tell you, it really tells you how volatile the market feels that the underlying is, right? So that is always taken into consideration when they're doing a trade. And of course, the cost of the trade is that tight bid ask, and the liquidity in the product getting in and getting out are all part of that equation. So I think your institutional investors in big funds and asset managers take all of this into consideration when trading options. I don't think there's any part of the equation of what is in pricing an option is not taking into serious consideration. And I don't think that an option being worth $10 at expiration is all they really care about. There's hedging, there's volatility, there's risk premia that institutional traders are looking for. So there's a lot of reasons why various institutional fund managers trade options, and they're not all just a directional play. There's some that are just looking at that implied volatility and taking advantage of that implied volatility. So 565U, there's just endless reasons of why that options are so interesting to trade. But one of the key things to keep in mind are to always know your risks in trading options, and know your entrance point and know your exit strategy, because that's where big fund and asset managers do best, is with sticking to their trading disciplines. I hope that helps.
Well done, sir. Excellent job, actually, of buying me time. I was able to find those exact correlations you just asked for. Let's play a little fun guessing game to round out the show here, Sean. You asked for WTI versus, let's say, the S&P and WTI versus NASDAQ, which is what they have here in the tool. I'll have to dig a little bit to find the Russell 2000. But what would you guesstimate, Sean, is the degree of correlation between WTI and those major indices? I'll let you know right now, they're both pretty much the same.
I'm pretty sure the correlation is going to be pretty low. I've been looking at the equity correlations that are all pretty high right now, but I would say between, let's say, crude and large caps, WTI and the Russell 1000 or the S&P would probably be in the low 20s to 30s, maybe even 40%. That would be my guess there, Mark.
Impressive. It's about 30% exactly. So well done, sir. You've been doing your homework out there, and not just all small caps all the time over there in FTSE Russell land, sir.
Not all just small caps. That is correct, sir. We are a multi-asseted index company, as you very well know, with almost $16 trillion benchmark to our products globally. So it's quite a breadth of investment.
All right, listeners. Unfortunately, that music means once again we've come to the end of this epic journey through the world of futures options. What a fascinating one it was today. A lot of names and complexes to break down. Had some fun struggles getting you all the data there. I think it's all lighting it up and all working properly now. So check them out for yourselves. CMEGroup.com/TWIFO or /TWIO to get the updated numbers for all of those. Some of those earlier in the show, we weren't getting today's numbers in there, so that might change things a little bit. But check them out for yourselves. You should always be doing that anyway in between episodes. If you're trading any of these products and you're not using these tools, I literally don't understand how you're doing it. It's kind of the only analysis game in town when it comes to all things futures, options, the skew, the volume, the volatility, all that good stuff. CMEGroup.com/TWIFO or /TWIO is the place to go. Just be aware on a busy day like today, it may be a little bit slow to update for you, but it's all running smoothly now. Mr. Sean, before we go, sir, we talked about your webinars. We talked about the interesting new articles and research coming out from your team. What else is cooking? What else can folks discover when they head on over to FTSERussell.com, sir?
Allentown asked a great question today about where to find our webinars. We've got a couple of great webinars that are going to be coming up, and we're working with our partner exchanges on them. It's going to be large cap versus small caps in an election season to kind of kick it all off prior to the election season. So look this fall for some fantastic webinar material coming out of FTSE Russell, including our partner exchanges in Chicago. Also, we're going to do obviously an election season. Then we're going to do a post-election analysis as well, so that we can take a look back at what actually transpired with volatility post the election. 2016 was an incredible trade, as we all know. So look forward to look into the future for some coming dates in regards to some fantastic webinars from us.
A lot for you guys to sink your teeth into over there at FTSE Russell on the old Twitters and FTSERussell.com as well. And of course, I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions, for listening live, for all the fun stuff that you do. Remember, if you like this show or anything else we do on this network, keep those reviews coming on your platform of choice so that you folks can continue to discover this program, hopefully on days when everything is working more smoothly than today. So on behalf of Sean and our friends over there at FTSE Russell Land, and of course our friends in CME, and indeed myself, I thank all of you out there for downloading, for streaming, for subscribing, for sending in such great questions. Keep them coming. And we'll see you back here tomorrow. New time, noon Central, 1 p.m. Eastern for Vol Views. And then back again on Monday for the option block, where it all kicks off all the way through to Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/ Options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.